Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Wednesday everybody. Yesterday's episode came out about an hour later than usual, but after it came out I had many people message me and say that the time was actually preferable. I would be interested to know what everyone thinks on this matter. I can actually produce the videos an hour later if it is the preference. Currently, the videos are published at 8:30 p.m. Beijing time. I'd like to hear in the comments below whether you think 8:30 p.m. Beijing time would be preferable or 9:30 p.m. would be preferable. Over the next few days I may put the video up at this 9:30 p.m. Beijing time, and based on the performance I will try and find a time that is preferable to most people. Okay, but with that said, let's move into today's episode. The National Bureau of Statistics has published its 2022 National and Economic Development Statistical Communique. This is the government's official breakdown of how the economy fares each year, and even with these likely somewhat massaged numbers, the picture for 2022 was not pretty. Let us briefly move through some of the main points, none of which should be too surprising. Of course, we keep in mind that these are official government numbers. 1. GDP in 2022 was 1.2 trillion yuan, up by 3% over the previous year. 2. Of this total, primary industry increased by 4.1%, secondary industry increased by 3.8%, and tertiary industry increased by 2.3%. 3. Overall labor productivity increased 4.2% year-on-year. 4. Total national population reached 1.41175 billion, a decrease of approximately 850,000. As a quick aside on this point, according to a survey published yesterday, Tuesday, by the All China Federation of Trade Unions, over the last 5 years, China's working population grew by just 2.8%. A significant drop in growth versus the previous 5-year period. Since 2018, the average age of China's workers rose from 37.1 years to 38.3 years, making them older than their US counterparts. Okay, back to the 2022 National and Economic Development Statistical Communique. 5. Per capita spending saw a rare decline, falling 0.2% in real terms last year. 6. Urban employment fell for the first time in 6 decades last year, with the number of urban jobs dropping by 8.4 million. This is something we explored in a previous video. And 7. 2.97 million people were collecting unemployment insurance in December 2022, up by 380,000 people from the year before. Japanese financial media outlet Nikkei Asia writes that the World Bank defines a high-income nation as one with a nominal gross national income per capita above 13,205. According to the National Bureau of Statistics numbers that we've just covered, China is just shy of this, reporting $12,608 last year. For comparison, the US nominal gross national income per capita level is over 70,000. State media has been putting a positive spin on some of the more concerning findings of the National Bureau of Statistics report. For example, quote, "There's no need to be pessimistic about the decline in birth rate. It is time for China to create conditions to improve the quality of the population, to make out for the decrease, and to replace factor inputs with productivity." End quote. Okay, let's move on to other economic developments. Our old friend, China Evergrande Group, is in the news again. The infamous developer who triggered, though as a symptom of systemic sickness, not a cause, the ongoing housing crisis, has yet to reach an agreement with major creditors on a debt restructuring framework, which some consider critical to avoiding asset liquidation. Evergrande faces a March 20th court hearing in Hong Kong on a winding up petition, and it is said that it wanted to get support from its note holders by around this time too. Quote, "Evergrande's debt restructuring is one of China's largest ever and carries broader implications for the country's nearly $60 trillion financial system. The progress of debt restructuring plans is a crucial factor in a winding up petition filed last June against the company. In such cases, a borrower's assets can be liquidated to fund creditor repayment." End quote. Key areas of disagreement between the developer and debt holders according to reported leaks, is how much of Evergrande's stake in its electric vehicle and property management arms it is willing to give up. The structural seniority of Evergrande's debt is another area of contention too. Evergrande defaulted for the first time on dollar bonds at the end of 2021. Next up, we have more on the economy. If you guys are enjoying today's episode, don't forget to hit the like button. It's always a huge help. And for anyone who can go that extra mile, as always, Patreon and Buy Me a Coffee links are in the description below. Thank you so much, everybody, for the ongoing support. This week, Chinese financial media outlet Caixin writes, rather tongue-in-cheek, that 2022 was, quote, a pretty good year for managers of China's mutual funds, but less so for their investors, end quote. What do these analysts mean by this statement? Well, 2022 saw a surge in the total assets under management, AUM, by China's mutual funds, partly driven, they argue, by growing popularity of mutual funds among retail investors. As of August last year, total assets under management hit a record high of $4 trillion, almost double the amount from 3 years earlier. This is great for professionals in the sector. However, investors, on the other hand, quote, had to stomach much market volatility last year, end quote. Data compiled by data provider Wind Information Co. Limited show that the average rate of return for all mutual funds on the Chinese mainland was a negative 8.5%. Actively managed equity mutual funds recorded a median negative rate of return of 20.3%. Quote, the reason for the volatility is pretty simple. 2022 was a bad year for mainland stocks. Two benchmarks, the CSI 300 index and the Shanghai Composite Index, plunged 21.6% and 15.1% respectively, as the country's economy was hampered by COVID-related restrictions for most of the year. End quote. One wealth management executive speaking to the outlet expressed, quote, in 2022 there was greater volatility involved in any single strategy or any single type of asset, and investing became more difficult. End quote. Private funds likely didn't fare much better. Indeed, according to private fund analytics provider Simulwang.com, of the 80 major private investment fund firms tracked, just 27 reported net gains on investments last year. Quote, investors have expressed frustration with the strategies being presented, complaining that they were paying higher management fees only to see the performance of their funds decline almost to the point of forced liquidation. End quote. Okay, so that was a lot of negative news, but let's end on a more optimistic note. The Caixin China General Manufacturing Purchasing Managers Index was published today, and according to the index, in February, China's manufacturing activity climbed back into expansionary territory after 6 straight months of contraction. Manufacturing accounted for 28% of China's GDP last year. Quote, in a nutshell, for February, the economy saw a faster pace of recovery following a peak in the recent wave of COVID infections. End quote. A breakdown of the survey shows that manufacturing supply, demand, and employment all rebounded in February. Indeed, the job market expanded for the first time in 11 months in February. While there are still a lot of challenges ahead, this is nonetheless very good news and indicates, though fallout remains, that the worst of zero COVID and the first COVID wave are well and truly behind the country. Now, the tough and uncertain road to recovery lies ahead. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a wonderful day wherever you are, and I will see you all tomorrow.